For introduction, firstly, in this article state, banks are important tool in economic sector throughout the country. Role banks are not only to commercial industry, but also have responsibility to provide service to an organization. Next, banks also help individuals and companies deal with problems when pandemic COVID-19 spread by providing financial assistance. Then, it is important for bank finance to make sure economic system is permanent and continue generate revenue. After that, this pandemic made financial crisis that banking issue the center of attention. The function of banks, which is becoming more sophisticated and evolves. Also, when pandemic rise in Ethiopia made 13,044 cases, including 14 people dead. Lastly, to better gauge the scale of Ethiopia's banking industry and solve the situation, the Ethiopian government predict the COVID-19 issue and took safeguard to prevent this economic calamity.
Literature review. Ethiopia banking industry was generally secure, stable, well-financed and profitable prior to the advent of COVID-19 in December 2019. Banks suffered a level of disruption that will affect all that had been the usual banking service within a few weeks following the start of the pandemic. Every week, fewer and fewer individuals make their way into physical bank location. People are taking money out of bank in preparation for a possible stay-at-home order from the government. Creditors want to restructure the loan and get the interest rate lower or way. In light of this, if this pandemic is going to be around for a while, bank will inevitably run into short-term liquidity problem and long-term solvency issues. Next, since the major market destinations throughout the world have closed their doors out of fear of the epidemic, firms involved in import and export have been hit hard, and as a result, most banks have eliminated commission fees, and for granting letters of credit to these companies, most financial institutions have also delayed the timing of installment payment on loans and advance for a number of months due to the pandemic effect. Lastly, the National Bank of Ethiopia (NBE) measures to stabilize the banking industry and adopting them now. NBE issued a new rule to restrict cash withdrawal from banks and MFI. In line with widespread international practice, the NBE issued the mandate for a number of reasons, including the desire to encourage a cashless economy, combat fraud and hoarding, lessen the likelihood of liquidity issues, and cut down on the expense of producing new currency. Financial institutions are obligated to implement policies and procedures to promote the use of non-cash based payment methods by providing a range of alternatives to traditional cash transactions and providing incentive for customers to switch from cash.
Ethiopia's banking sector was appreciating an unrecognized period of growth and prosperity prior to the pandemic. However, the performance of banks was expected to suffer in all areas, including deposit mobilization, credit and advance revenue, profitability, security risk, and difficulties for newly established banks. Firstly, the effect on deposit of mobilization. It is difficult to mobilize new deposits at the moment, since it is difficult to persuade customers to open an account and begin saving, as most businesses have encountered a downturn, which has resulted in lower revenue and bank deposits for the majority of them. Also, customers are withdrawing their saving for personal use due to the pandemic. Cash flow issues for banks and their clients may arise if this trend is allowed to last for a lengthy period of time, which might consequently undergo liquidity issues. Besides, the effect on loan and advance. Many banks' loaning processes are being greatly stretched by the significantly higher demand for new or modified business credit, especially during COVID-19 era. Throughout the pandemic, banks and all businesses are taking cover to continue operating safely and soundly. However, many companies are particularly at risk. lending standards could tighten as the situation develops, which would increase credit losses. Additionally, the effect on international banking. The disease outbreak closure of the major market destinations had a significant impact on the global business. Most import and export activities have been temporarily suspended prior to the pandemic. Ethiopia received about $4.5 billion in remittances each year. Of this amount, the diaspora's contribution is quite significant given that they are dealing with the difficult realities of the COVID-19 shutdown in the Middle East, Europe, North America. This will result in a shortage of foreign currency and have a significant impact on the income that banks receive from these sources. Next, effect on profitability of the banks. Due to decreased business income and staff layoffs brought on by a lack of demand, many consumers and businesses will see a fall in cash flow, making it hard for the borrowers to perform their regular interest and principal payments, which results in an increase in both commercial and retail non-performing loans. Longer periods of reduced interest rates on loans are possible, which may impact the bank's profitability.
Furthermore, the COVID-19 outbreak had caused cyber attack. The growth of alternative integrated payment method could be fueled by mobile wallet as a result of customers switching to a cashless world out of fear of the infection. As a banking system capability increase among customer, organization, and employees, they find it hard to adapt to this unfamiliar setting, causing a growing concern about cyber attack and fraud.
Finally, the effect of newly entering banks. Roughly 11 private banks are raising capital by issuing stock with the aim of entering the banking business very soon, along with the existing 18 banks in the country. Next, it might be difficult for them to begin operations now. If the pandemic persists for a long period of time, it will be tough to enter the market and begin offering financial services, and as a result, shareholders' money will be locked up. As banks deal with the health problem and its aftermath, the following information may help them quickly think about and plan their immediate and next step to help their customers and strengthen their relationship. Firstly, financial institutions must re-evaluate the credit risk of customers who have been exposed to the coronavirus. They have to quickly look at the data for early warning signs and find industries and market groups that are at high risk. So, banks might figure out how to help these customers. Customer will be called to find out what's going on. Portfolios will be separated by customer need. Support measures will be put in place where they will have the most effect, and risk mitigation strategies for early defaults and underperforming exposures will be changed. Secondly, the bank should come up with new financial products that work well in the current situation. This will help the bank and solvency measures. Banks must come up with good strategies for managing liquidity if they want to keep the market fluid and meet their customers' changing borrowing needs. There may be a need for more credit. If the disease spreads for a long time, the monthly liquidity reserve might not be enough. For their clients, banks should put a high priority on liquidity measures and sign of loan default. Lastly, you have to do your banking online. People who get their pension payments at branch location could catch the virus. The elderly don't use it because they don't like it. Financial institutions should focus on keeping these groups' transfer methods up to date. Banks should make it easier and more appealing to do business online and digitally.
Next is conclusion. The economic and health risks brought forth by the coronavirus are having an impact on every part of business operation. The banking industry is vital to the nation's economic activity and must run smoothly. The economic system most severely impacted by the epidemic are financial services. Before the pandemic, the Ethiopian banking industry was expanded rapidly. However, COVID-19 has just begun to impact every aspect of banking, including deposit mobilization, credit management, global banking, and system security. In this difficult situation, banks have begun to play a significant role as a systematic stabilizer for their client, staff, and the nation's economy as a whole. The government and the bank themselves are pursuing resilience measures to lessen the epidemic's harmful effect. They are working to prevent any disruptions to the crucial service like payments, credit extension, and cash and deposit services. Bank representatives are working hard to be watchful and scanning the current status with their clients and offering their help accordingly. In the present challenging period, most of our banking are already thinking about easing off the deadlines of the payment. lowering interest rates, and making interest-free working capital financing available. They are attempting to strategize so that they can get through this challenging moment with the fewest possible losses. Although banks have currently implemented some of these relief measures as a part of their natural disasters response, the situation will need be more extensive to help the client. Supporting customers through this trying time will strengthen the customer bonds and reinforce bank position as important economic booster. Since how bank respond to the customer during this challenging time may have a significant impact on how banks are seen for years to come. Banks should demonstrate empathy for their consumer while making a wise business decision. It demonstrates that epidemic is also giving bank a chance to demonstrate how they might act as a systematic stabilizer by providing services that at least very particularly service interest for the society.